This financial market meltdown that we are seeing could be a good opportunity for you to buy or to enter the markets right now. Not only crypto, but also the stock market in general. If we take a look, for example, in 2017, 2021, 2024, all of these years were very important for crypto because they had these melt ups, meaning that we got a huge boost in price for Bitcoin, but crypto as a general, the total market cap of crypto went up a lot during these years. Now we're seeing similar market conditions also on the stock market. So the traditional market is also seeing very bullish conditions that right now it looks bearish, but it looks like it would be able to catapult, to launch your investments to a new high. And today we're going to explore three main factors amongst others that could mean that after this correction, after this meltdown, we are most likely headed towards all-time highs right after everyone goes crazy mode, everyone goes into panic conditions. So let's jump right into it in today's video. So we know historically the S&P 500 and Bitcoin, they have moved kind of similar, or at least in a similar trajectory, especially during high liquidity events, liquidity rallies. So elections, major wars, major news, all of these tend to create huge liquidity rushes, and the price of both of these assets, they tend to move in similar manners. So now we see financial conditions that are similar to pre-dot-com bubble era. So for stock markets, these could be a huge boost, kind of push towards all-time highs, which eventually could reflect on Bitcoin and crypto as a whole. So the first thing that we have to talk about is the interest rates. So the liquidity most likely will be injected into stocks and crypto, mainly because we're getting interest rates lowered now. Well, since the beginning of the year, so far 50 BPS base points have dropped. That may not seem a lot, but if we look in the grand scheme of things, when inflation or the interest rates starts to go down, we have less opportunity for you to stock up cash. Cash is not going to get you that much yield anymore. So what ends up happening is that the yield that you would have on holding US dollars, holding your fiat currency, doesn't make sense for you to keep your money there. You're going to look for more risky approach, for more risky places where to deposit or invest your money. And this is where crypto and the stock market comes on. And one is correlated to the other, as we mentioned before. When the interest falls, people are more interested into going to Bitcoin, to going to other crypto assets like Ethereum, even though it is not performing well, or any other sort of stocks or volatile assets as a whole. Historically, every time we see interest rates go down, Bitcoin has an explosion of price. We saw that in 2017, we saw that during the pandemic, 2020. So these key indicators and these key factors could mean that eventually we're going to see Bitcoin rallying up once again. Well, maybe not right now because we're going through a meltdown, both for the stock market, both for crypto, but we're also going through a meltdown for the US dollar, which is the next point that I want to bring, which is using crypto as a hedge narrative, Bitcoin as a hedge narrative than the dollar. The US dollar has already had the largest 4-day drop in price since 2022. So that is very, very weak. We have a dollar that is losing momentum, that is losing a little bit of pace, compared to other years. And why does this matter for crypto and for stocks as a whole? Especially for crypto, because crypto is seen as digital gold. So when the dollar gets cheaper, it is better to buy gold. It is better to have other currencies, maybe other cryptocurrencies, and we always see that play out, that things that store value like gold, like other precious metals, they tend to go up when the dollar itself is losing strength. It is losing momentum. But the dollar losing momentum itself, we kind of get a flywheel effect because now the US government is working on a reserve. So this reserve will have Bitcoin in it. So even the government is hedging or is using Bitcoin to keep and store value inside the US treasuries. This is kind of like a flywheel effect. So the dollar seems to be losing momentum, but it will be held, guess what? By the Bitcoin, by cryptocurrencies. And that will boost the dollar back up after crypto will already have gained a lot of momentum by default because they're now part of the treasury. The treasury owns and holds Bitcoin and other cryptocurrencies. So that is very interesting and very good to see and to know that this is happening. It may not relate right now, but in the future, it will weigh into the price action of Bitcoin and other cryptocurrencies a lot. So BTC, Ethereum, Litecoin, Cardano, all of these that were mentioned in that bill of reserve for digital currencies, those will be affected a lot in the near future. Another thing that we're seeing is that the oil prices are falling. So the inverse of that is usually right, which is when oil prices are going up, then there's a lot of inflation, there's a lot of recession talks, there's a lot of fear towards the market. Historically, every major recession has been preceded by a rise in oil prices. So every war, every huge recession that we had, oil prices were huge indicators on the happening of these events prior to that. So in the past few months, the price of oil has dropped by 20%, and now it is at its lowest level in 4 years. So here we have an indicator that when prices go down, when the oil prices go down, consumer spending increases because things are going to be cheaper. Things that are transported via land, by land, that uses motor vehicles, that uses anything with an engine that runs on gas, on any derivatives of oil. These things tend to get cheaper because oil is cheaper. So the price of oil anywhere goes down. Consumer goods increase in households, these sorts of things. So the economy increases a little bit when the prices of oil go down, and that creates more profits, more margin for bigger companies that they can reinvest and maybe hire other people, and that creates that flywheel effect. So money into the economy, lower inflation, less people scared, more people leaning towards investing money, and that could trickle down to Bitcoin being one of the places where they're gonna invest. Now that because the oil prices are low, what happens is that it gives a little bit of room for the Fed to cut interest rates even more. So again, that flywheel effect that we were talking about before. I saw some people comment that oil was going down because people are not interested in oil anymore. And for me, the answer to that is that what world are you guys living in? Because electric vehicles take 10% of everything. Fossil fuels still the main source of energy for the planet, for cars, for the energy that we use. Fossil fuels like the majority of it. So I don't know why people would say that people are just losing interest in oil, which is somewhat a ridiculous take on that. We already saw that historically. We can look at data for stock market, which then will reflect in the crypto market, that in the 1990s and the 1980s, it's when we had huge stock rallies, huge financial market rallies, because it was the same dynamic. The prices of oil went down a lot, and that caused a spike in money to be spent inside the economy, inside the global economy. So the macro conditions continue good. And even though we look at Bitcoin right now, and Bitcoin has lost its $108,000 all the way back to $81,000, touching even $76,000, by zooming out, we see that this is just a correction, because we have this nice momentum still. We're still bullish when we look macro. Instead of micro, we look macro. So we open our eyes to look to years instead of months, instead of days, weeks, hours. So now we're looking at years. We're still very, very good. And guess what? Now we can see what could be good prices for you to buy, for you to DCA, for you to keep stocking up your Bitcoin, keep stocking up on the cryptocurrencies that you love. And guess what? It will be right around this range right here. So between the number that we spoke about here multiple times, which is around the $69,000 mark. So everything between the 81 and the 69. For me, these in the long run are great prices for you to enter, especially if you didn't buy right here, especially if you didn't buy in the 28, if you didn't buy in the 17,000, didn't buy in the 55,000. Guess what? This is a good place for you to enter right now. And not only for crypto, for stocks as well. These could be good places for you to look into. So if you look at the S&P 500, same thing. Look at this trend right here, very bullish trend. And this could be a good place for you to enter right now, because this correction is bad when you look at days, weeks, hours, but is really good when you consider other indicators like the three ones that we mentioned: the price of oil, inflation rates going down, and the overall positivity. These could be good prices for you to enter. So again, the $69,000 for Bitcoin, we already mentioned that before as that golden number, that Bitcoin will now go below that. And is that the truth? Is that the absolute truth that you should follow by? No, you should have that as a conviction, but as a good trader, a conviction doesn't mean anything if it is wrong. So you need to be able to see the patterns, have your ideas laid out like I'm laying down in this video. And then if these ideas don't go the way that you're planning, you should be able to reconsider and see what the market will do once it breaks below these numbers and these levels that we are talking about. Because if it breaks below, it will change our ideas completely, because now we're going to be looking at a worst case scenario. So instead of being bullish, now we're going to turn into bearish. And that's okay. If you are just a trader that is always bullish all the time or bearish all the time, you're not going to make it. I'm sorry about that. The market is made out of cycles, and these cycles cannot be predicted, can just be expected for, accounted for. So here we are accounting for a good recovery right after this huge correction that we're having in the financial markets. In the dollar itself, the DXY is not doing very, very good. It is going down a little bit. And that followed by everything that we said here, could be a good opportunity for you to enter, to buy in when people are scared. Again, the fear and greed index is used for this specific reason. When people are panicking, usually is the best way, is the best place for you to get in. Pandemic shows us that when a lot of people were selling, when everything was 60% in the red, that forced recession that we had, that was a huge place for you to get in, for you to buy your stocks, your shares, your cryptocurrency. Because why? Once we got out of that pandemic, out of that recession, it was just an explosion of money flowing into the system. So now this maybe is not going to be the same way right now, but it's going to be a mini version of what happened in the pandemic. You just have to look at indicators. You just have to look at the macro factors in the economy, in the world, not only political, not only economical, but geopolitical, everything that is related to how the market operates. So I hope you guys enjoyed this video. If you did, don't forget to like, subscribe. And if you think different than me, please comment down below. What is your train of thought on what do you believe will happen? Of course, remember that my views are macro for this video. So here we're not talking about weeks. We're talking about a huge cycle of maybe until the next halving, maybe until 2027, 2028. Who knows? So take that in consideration when writing down below. But thank you so much, and I'll catch you guys on the next video. Peace.